When we want to take the risk entries, we either look into one of these things. Your H4 time frame is your confirmational time frame, because if the H4 time frame is for someone who is an amateur, they would have seen the price the way they have seen it. Into today's video, I want to touch more specific into the errors that most traders make. And by the end of this video, you'll have absolutely clarity on what to focus on and what to concentrate when it comes into executing your trade. So bear with me until the end of this video. And if you have any question, don't hesitate to leave your comments below and I will reply them instantly. Now, I'll be using EuroCAD as my main example, and we want to just break down this particular pair together and then see on how we need to position ourselves and the decisions that we need to make consistently so that we can have a better return rather than having unnecessary losses. Now, let's start off from the daily time frame. Now, when it comes to the daily time frame, I normally look on mainly three things. I look on the area, I look on the structure, and I look on the candlestick. Now, if I just look onto the area, I can see this is my area of volume. Why? Because this is the area where we had the volume which caused all of this movement. And as we can see, there was a little bit of pullback toward this particular area. However, we did not get back to those particular highs, at least to make or create a double top. Rather, we near missed this particular area. So there is something there to note. We have a slightly near miss into that particular area. However, now on the flip side, we can see that the chart on the chart wick, there was an impulsive movement to the downside, and the price started to show us some signs of creating some continuation. So it means that we are likely to move into the direction that we were anticipating in the first place. But keep in mind now, we have near missed this area. So there is a very higher chance of price just going back to this particular highs and then breaking above, because as we know, for the market to make a huge shift in price, it needs to do one of these two things: either to create a double top or double bottom, or to break the previous highs or low. Now into this, we can see it hasn't done anything nearly to that. However, what we can see is just we have seen a move to the downside, then have a correction, and we'll see as time goes. Now, that was regarding the area. In terms of the structure, we can see this correction in form of a continuation state, and in terms of the candlestick, we can see that we have momentum candles which are giving us some signs that we are likely to push to the downside. Now, if we just moved into the H4 time frame, we would have seen that the H4 time frame is looking more clear, because we would see this as a continuation. One would see this as an impulse, would see this as a correction, and what we would be waiting over here is just to see the final 30 touch. Now, let us just forward the price a little bit and then see the price for what it is, and then we will assess from there. Okay, as we can see, now we have created our third touch, so we have a very clear touch. We have there our first touch, we have our second touch, we have our third touch, and we have a clear middle section. And keeping in mind that this is an impulse, this is a correction, so what next? We are likely to create an impulsive movement to the downside. So I'm normally using the H4 time frame as my confirmational time frame. And into this example, what I would say is this: am I seeing any confirmation of this price to really move in the direction that we are anticipating in the first place? The answer to me is no. Why? Because first, we can see we have a near miss toward this area value, which is an area of volume. Secondly, we can see that at our 30 touch, we finished with that bullish rejection candle, which means that we have rejected to the structure, not through the structure, which means now we have a very higher chance of price to just feel that particular wick or that rejection that has been created in form of a wick before we see any movement in price. Now, let us go into the H1 time frame and see the price for what it is. Now, For an amateur, what they will see is that they'll see there's a clear, complete in structure or pattern, which is still fine and fair, right? I'm not trying to say there is anything wrong with that. However, now the key thing is on the H4 time frame. Your H4 time frame is your confirmation time frame, because if the H4 time frame is not confirming the direction to what you are looking in the first place, I'm telling you, more often than not, the trade that we are looking will not play out. Now, let us just break down into the H1 and let us see the price for what it is. Now, for someone who is an amateur, they would have seen the price the way they have seen it, and they would see that this is just an override area, and we have created there a V shape which has caused this impulsive movement. Now we can see we have a clear, larger continuation flag in form of ascending channel, and we have just retraced. As we know, within the system that we are using, when we want to take the risk entries, we either look into one of these things. It's either a rejection candle or a retrace candle, right? Regardless the time frame that it appears, right? Now, in this example, we can see we have a clear 1 hour retrace candle. So technically, the entry is there, right? However, what have I mentioned to you? I've mentioned that the H4 time frame hasn't confirmed the bias for us to get involved into this position. So what would be the better option, considering the fact that we have a near miss from the daily time frame, and then we have a bullish rejection candle which needs to get filled into the H4 time frame? How can we mitigate the risk into this scenario? Or are we just opting to enter into this trade? Now, you would say that we have something that is 1, 2, 3, indicating that price is coming to an end. Clear retrace candle, which is a bearish retrace candle, and you can get involved into that. But from what the H4 has stated, the way that we can enter into this is better to wait for a clear push down and a continuation flag, just to mitigate the risk. The mitigation of risk into what? First, that bullish rejection candle that we have seen, near miss from the daily. Rather than that, you just be playing around with the price and then not understanding what you need to focus on. Now let's take an example. Maybe one would have opted just to enter the risk entry over there, just their stop loss just above and their entry just below, and then they are looking just to get involved into this position. Let us see what would have happened. So let's see what happened next. They would have been tagged in, and let us see what happens next. From there, as we can see, price just pushed to the upside, and this is what we were seeing, or what we were looking from the first place. What do you see? You can see now the price has just returned to the area where we were looking, and now after evolving, we can see we had now more better structure with a more better picture. Just to delete that and to show you, you would have seen that as your middle section. So you would have opted to enter over there, or you would have opted to enter into this continuation over here, visibly seen from the H4 time frame. Not the perfect one, but as we can see, after price just hit the area volume that we are looking from the daily time frame, we can see the price started to make a huge shift in its price. So guys, whenever you want to enter into the market, please make sure that you do not rush the processes. Always stick the confluences better and understand what the market is trying to tell you, rather than just thinking of what is likely to happen. So until next time, hope you enjoyed this video. Don't forget to subscribe, like, and share the video. Till next time, God bless.